Hello, today we are going to talk about one of the most important areas in Forex trading, which is risk management. Actually, I came back to this concept after a few videos and a few blog posts about trading examples. I was excited that I started finally settling down on a trading strategy, and I started showing what this strategy is and showing the technical tools that I'm using. But I need to go back to the basics. I need to go back to one cornerstone of Forex trading, which is my journey in knowing how to learn risk management in Forex trading. There are different parts in Forex trading. There is the amount of risk or exposure that I'm willing to risk from my capital on every trade. There is lot sizing, and there is the RRR, which is the risk to reward ratio. I talked about these concepts before, but I have developed a series where I go step by step into each one of those areas. In my blog, I have talked about the first step, which is setting your financial goals. You need to have that as a first step. Then we need to know the psychological effects in Forex trading, which we did a blog post on that. We created a blog post to look at all the aspects of risk management, including the steps that I talked about. This blog post has all the areas, and we are going to create a blog post on each one of those to explain them in more detail. So in this particular video, which is going to be part of a blog post that is going to talk specifically about risk per trade, how much exposure we are willing to have in one single trade. I will show you what I started with. Let's go. This is my, what you're seeing now is my trading log, and this is the risk area per trade. I have here a scorecard. This is scoring each trade. For example, if my trade has more than 4 confirmations, then this trade is 80% score. If it has less than 3 or 1 or 2, then it's a 50%. So this trade is 50-50. It's risky. And if it is exactly 3 confirmations on the trade, then I give it a 70% score. In the past, now, yes, I did do some exceptions before, but the general rule is that if the trade is 80%, then I would have a 2%. I don't know if I have one here at 2%. I think I was too scared. Look at this. Yes, it was 50%, but I gave it a 2% risk percentage. There was a trend line and RSI divergence. I thought they were very strong, but I thought wrong. This trade lost. So I lost 2% on this trade. So the general rule was, if the trade was 50%, then I will risk 0.5% on the trade. Meaning, if my capital is $1,000, then I will lose $5. If my capital, if the score is 70, then I'm willing to risk 1%. That means I'm willing to lose $10 out of the $1,000 capital or account size. If it is 80% score, then I am ready to risk 2%, which is 20% of a $1,000 account. Now, I have a dynamic system here where I look at the balance. So even if I start with, let's go down, because I started a new testing environment. Here I started with 1,000. it increased to 1024 and it went up to 1059. Now the 1% or half percent or 2%, it's going to be out of the 1059. I don't stick to 1000, the original invested amount. The 1% is dynamic to the balance of the account. So going back, this old system created a confusion for me, because some of those, for example, this, not this one, no, I'll show you something different. Okay, this 1% lost and this 1% lost, but this half percent won, and this half percent and this 1% won. So there are winning trades that would be half percent, but there are losing ones that are 1%. So this affected my balance, and this is not getting me where I want to go. Therefore, I changed the whole system and I unified later on, especially after this 2% loss. I unified my risk exposure per trade to 1%, regardless of the score. I only look at the score for analytical reasons. I want to see how accurate is the scoring. If the scoring is 70, is it really making an effect on the amount of winning trades of those 70? What about the 50%? What about the 80%? I want to analyze those in the future. So this is the risk that I take per trade. Now, another rule for risk exposure is that in general, I try not to open 3 trades at one time. Therefore, my total exposure on open trades is 3%. And then I have a limit to my weekly exposure. My weekly exposure is 5%. If I lost 5%, or slightly more than 5%, then I stop trading for that week, and then stop it and start all over the following week. This is partly I want to manage my state of mind. I also want to take away whatever is happening in the market this week and it's not enabling me to have winning trades. I want them to go away by Friday and then start all over on the following Monday. So this is it. This is the whole thing about risk per trade. Decide on the amount of risks that you're willing to take. Academia in Forex trading talk about 1 to 2%. To tell you the truth, 2%, I think it's too much. Winning 1%, risking 1% with having other rules, like when we talk about the risk to reward ratio, we will see the benefit of this 1% and what it will do. We will also look at lot sizing and its relationship to the stop loss distance from the entry price. All those things we are going to get into one topic at a time. So this is it for risk exposure. My risk exposure is 1% per trade, 3% on open trades, 5% on weekly basis. So I hope this helps you, and this helps you from a perspective that you're listening to someone who is trying to test things around, and this is my personal trading and investing journal where I document what I experience, what I learn, and what I apply, and the results of my application. So from this 1%, and because there is a topic that we will talk about, as I said, which is the RRR, the risk to reward ratio, which I have it as 2 to 1, meaning I win 2% and I lose 1%. So although, look at this, I will show you the win to lose ratio. I have 11 losses and 7 wins starting January 25. I started on the 7th of January. Today is the 29th of recording this video. I'm going to add it. The blog post was published yesterday, but I'm recording this video today. So as of today, I lost 11 trades, I won 7, but until now this month I have a 4.17% winning. I have on the 1,000 capital, starting capital, I have $41, although I lost more trades than I won because of the risk management tools that I'm using. Okay, see you later in another video where we talk about another topic in risk management. Thank you very much and see you later.